Hey guys, what's up and welcome to Techno Trends. Today is ticker symbol Tuesday, and that means that I am going to go tell you about a new stock pick that I like. Last month we talked about Salesforce ticker symbol CRM when it was $176 per share. Since then, Salesforce has railed 9% all the way up to above $190 per share, offering a huge upside that outperformed the S&P 500, Dow Jones Industrial Average, and the Nasdaq Index, meaning that it has performed amazing. Today we are going to be talking about Energous, ticker symbol WATT, and why I think it has a huge amount of upside.
Energous is leading the launch of Wireless Charging 2.0, which supports charging devices over the air, as well as fast charging at contact.
All of your electronic devices, cell phones, tablets, remote controls, fitness bands, and more can begin charging as soon as they're in range of the WATT transmitter. Using radio frequency technology similar to a Wi-Fi router, WATT full-size transmitters deliver energy packets to any electronic device safely at a distance of up to 15 feet. At only 3 millimeters, WATT receivers are minuscule and can be embedded into nearly any portable electronic device. Even charging waterproof devices that are typically a hassle can now be done with minimal effort.
Energous has many patents around its wireless charging technology, and that is very important because Energous is creating value through the patents that it owns. Although Energous only has $60,000 of revenue per quarter right now, that amount of revenue is guaranteed to increase as more companies partner with Energous and more companies want to make products with them. With their recent FCC approval, that has created a wave of new companies that want to partner with Energous. In their earnings call, the CEO of Energous specifically said that,
"While engagements and revenue have been delayed, we have not seen any weakening in our interactions with potential customers. Largely due to the interest and excitement generated by the WATT Power Hub, the total number of actual customer engagements has actually increased in the last few weeks. We are also tracking more than 10 customers that are in various stages of development with a goal of shipping WATT-enabled products to consumers before the end of this year."
There were 10 different companies that want to partner with Energous, and that was only a few weeks after their FCC approval. A few months have now passed, and I think that there are definitely more than 10 companies that want to partner with Energous. With the recent announcement of 2 separate companies that have partnered with Energous, the stock has spiked over 20%. Last week, Energous announced a partnership with Repo Battery. This caused the stock to spike 75%. Repo Battery is one of the largest battery manufacturers in the world. This matters. Like, seriously. Why the heck would Energous partner with one of the largest battery manufacturers in the world if they expected to produce a small amount of batteries? Think about it. They're not expecting to sell a small amount of products. They're expecting to sell a lot of these batteries with the energy chips incorporated into them. I'm going to do some speculation here, but I think that Repo sees a bunch of potential in Energous's WATT technology, and being able to implement their WATT technology into their batteries could be a huge profit source. And because Repo Battery understands the battery industry very well, I don't think they're messing around when they're investing a bunch of R&D money into making batteries with Energous WATT technology. In the picture right here, this shows how Repo can make custom batteries in many different form factors and shapes with Energous WATT technology embedded in them. The truth is that because medical equipment is already so expensive, the WATT-enabled batteries and transmitters won't break the bank for hospitals.
Cords and open plug ports on devices can harbor bacteria and be difficult to clean properly. WATT enables medical tools, sensors, and other devices to be hermetically sealed and waterproof, allowing them to be sanitized much easier. Sensors and asset tags throughout hospital rooms can be charged over the air.
With the pandemic roaring through the country, I think that there will be a prioritization towards getting things sanitized correctly, and Energous will make that possible. This combines 2 trends that will make Energous products sell super well. If all goes well, their technology will be seen all around the world. In every train station, household, restaurant, and living room could have Energous WATT transmitters. Right now, the company seems to be in a great position where they are about to announce a bunch of products, strategies, and partnerships that will ultimately drive the stock price up. In the Q1 earnings call, the CEO of the company said that although they had transmitters ready in 2017, they were way too big and all the companies wanted them shrunk down. And instead of spending the last 2 years embedding the oversized receivers into products, they had to spend the last 2 years shrinking the chips down. While this happened, no important news came out about the stock, and the stock price slowly sank. While it was sitting at a comfortable $22 a share. A year ago, it was at $6 a share. 3 months ago, it was all the way at 60 cents a share. I think that people misunderstood the stock for boasting about technology that will never be released. Because there were so many rumors that they were going to release watt-up technology in the iPhone 10, I can see why. But in reality, it was inevitable that the watt-up receiver chips would not be put in the iPhone 10 because they were way too big. What people don't understand is that when Energous was $6 a share, they were actually further away from their goal of releasing wireless charging products to the world. And even though they are closer to that goal today, the stock still sits at $2 a share. When their stock was at 80 cents a share, Energous announced that their wireless charging chip had gotten FCC approved, causing the stock to spike all the way to $2 a share. Since then, they have released many strategic partnerships, and it seems to be that they are way closer to their goal than other people think. Currently, the stock is way oversold, and it shows that by its high reactivity to small news events and important strategies that will drive the stock price up. If you watched my last videos, I laid out a bunch of standards that will tell you what the deprecating and elevating factors of a stock are, and things that are in favor of it that you might not realize. So let's get into it. Is there a layer of hype around Energous? And I'm gonna say yes, because it is very spiky on very small amounts of news. Is the CEO some magical unicorn? No. The CEO is not really a super famous CEO, it's not like Jeff Bezos or anything. Is the stock overvalued compared to other stocks in the industry? For this thing, you could argue that it is overvalued, and you can argue that it isn't overvalued. In a sense, Energous is overvalued because they haven't released any products, and they don't have any revenue. But Energous is undervalued in terms of the products that they are going to release in the future, and the actual revenue that they can create. If you can compare it to any other semiconductor company, the market caps of those companies are upwards of $50 billion, but the market cap of Energous is around $100 million, offering a huge amount of upside. While the market cap of the company might not hit $50 billion, it definitely can hit $1 billion, offering a 1,000% return. The market cap was around those levels when it was rumored that Energous was going to partner with Apple, and that was based off of rumors, not the actual announcement. Will compounding trends make Energous grow faster than people think? I'm going to say yes. On the iPhone 10, Apple removed the headphone jack because it took up too much space, and they could allocate the space for other things. With companies trying to push the limits and make their technology smaller and smaller, I think that every single ounce of space will become more and more important. The market for wearable technology is rapidly growing. Wearable technology requires major size constraints. With the growth rate of the Apple Watch and the soon-to-be announced Apple AR glasses are proof that wearable technology is bigger than we think it is. In the future, Energous could support nanotechnology, and it could help with the rollout of the Internet of Things. Thing number 3. What is the competition to Energous? Drum roll, please. Almost nothing. There's only one other company that is capable of producing products like Energous, except I would consider that company more of a slight competition rather than an actual threat to Energous's reign. One of the competitors is Ossia, but that only supports wireless charging up to 1 meter away, while Energous supports wireless charging up to 20 feet away. And Energous is one of the few companies that offers both near-range and far-range wireless charging. And they create a big barrier to entry because they have a huge amount of patents. This is good. But with all this good, there is some bad. Energous is an inherently risky company. Because Energous is a startup, they don't have any products on the market right now, and they're not really creating any revenue. Currently, they only sell hearing aids, but those hearing aids have not been released yet, and they will be released later this year. With that said, if the technology is actually horrible when they release it and no one uses it, the company could go bankrupt if they don't get any return on their investments. Because of this, investing in Energous is inherently more risky than investing in Salesforce, which already has a well-proven business. While I can't guarantee that Energous won't go bankrupt, I can guarantee that if people like the technology, it can end up as valuable as companies like Qualcomm. And I'm spewing this information because I've been following the stock for the past 2 years, and I've listened to the last 2 earnings calls. This is the story of Energous, and this is the story of WATT. I really hope you enjoyed listening to my opinion on Energous and what the future of the company can be. Keep in mind that it is a speculation play, so it's way riskier than Salesforce. And please don't invest more than 8% of your money in it, because if you lose it all, you can recover all the money within 1 year, because the stock market has an average return of 8% per year. Please like the video and subscribe to my channel if you want to see more content like this. I hope I inspired you to start investing. And please comment down below and tell me what you think of my opinion on Energous. Is it good? Is it bad? And do I have gaps in my research? And peace.